This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup, and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Gayatri Sarkar, general partner at Advaita Capital and founder of SheVC. Gayatri Sarkar is the founder of GP of Advaita Capital, a growth activist tech fund focused on DEI-ESG metrics and venture asset class. Team of experienced investors from former Blackrock CIO, Oppenheimer, SAC Capital, and hedge funds. Gayatri is also the founder of SheVC, a media platform that featured $100 billion plus combined capital of institutional investors championing the diversity, equity, and inclusion for VCs, PE investors. Gayatri, thank you for joining us.
I'm super excited to be here, Hall. I'm a big fan of your podcast. I've heard it, and I never thought that I'll make it to the podcast.
Great. Good to have you with us today. And so let's kick off with your background and what did you do before investing in early stage companies?
Yeah, so I never wanted to be an investor, and I never wanted to be an entrepreneur. That was the mindset of the environment I grew up in. So I grew up in India, and I studied physics and math. I worked for Hewlett Packard Labs, IBM. I managed multi-billion-dollar accounts there and worked for Goldman Sachs. And then accidentally, I became an entrepreneur, and it's like a drug. Once you are there, you cannot come back. I had built a successful consulting company of my own, and my first client was Treasury, U.S. Treasury, besides State Street, and a lot of large asset management firm, boutique firm. So that was my first foray into entrepreneur. It was nothing like a venture capital kind of a business, but it was more like a small business. It was WBNC certified, and I really enjoyed that. And it's a hell of a drug. You cannot get out of it. And after that, I worked for Federal Reserve Bank of Boston. I used to manage U.S. Treasuries assets for U.S. military and Navy, worked in a hedge fund, had a small fund of my own, sold it to NFLA. So yeah, that's how my journey happened. I always consider myself as a tech architect, and technology is something that I understand. And nowadays I'm investing in that area too.
Great. So what excites you right now?
I think there is always something that is happening in the venture capital world, in the private asset class, to be excited about, especially in the early stage. Especially with COVID-19, I think there's a new opportunity is coming because there are so much of issues of that we are seeing around, that a lot of legacy verticals has not transformed. So especially they have not been digitally transformed. We are not able to go to any sports arena. This is the first time in our life, even World War I and II, we still were able to play sports. We're still able to play sports in our backyards with our friends. So I think things are changing, and I would love to invest in those areas which are creating new economy, especially in future of work, deep tech, AI, machine learning. Data has always been an engine of where we see at the forefront of intersection of technology, and as we call it, a zero marginal asset class of everything that is free. But I think it's a new world that we are living in right now, especially due to pandemic. And I think we are going to see a lot of amazing companies coming out.
Well, great. And so you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
Oh, I don't think I'm the right person to give an advice to my fellow investors whom I know all of them pretty well. But I think they're all very smart. At the end of the day, as I can say, we all are money managers. We are raising money from institutional LPs, and our biggest focus is making sure we can get our investment returns. So we are always looking for companies that's going to disrupt the market, that's going to be the next unicorn. But at the same time, I think nowadays the investors' thought process is also changing. We are looking for not just great companies that's going to change the world, but at the same time, you're looking for, to bring much more gender parity. We are also looking for sustainable tech. I think these are the newest opportunities that venture capitalists as well as growth stage investors like me are looking into it.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise that first round of funding?
Yeah, so I should give a full disclosure. My second startup, when I started, I was like, oh, my first was so successful. I will be really good in my second, and I failed that. So there's definitely not a secret sauce to success. Everybody has their own path, but also one has to be open for feedback and learn as fast as you can. It's okay to fail, but it's not okay to stop trying. So I will strongly suggest startups to understand the market that you're in, do a research, and at the same time, I will tell them that ask that question, what's the founder investor fit, before you go and ask, for checks and dollar signs from your investors, the kind of investors that you like. Are they the kind of investor you really want? Because they might be investing in different verticals. I think a lot of founders, they don't do that background check. That's one. Number two is that a lot of companies are not built for venture capital. And this is, I think, we VCs have been shouting from the top of the rooftop that a lot of companies are like small business, or they can grow and become more like a private equity type of opportunities, but they may not be venture capital business. So I think founders need to understand where they find themselves fit and what kind of investors that they can attract. And at the same time, how's the fundraising landscape? I think people has to do more research and understanding before they jump into the water and start swimming.
Great. Well, let's talk about the state of startup investing. How do you see the industry evolving from here post-COVID?
Yeah, I think the industry is changing leaps and bounds. I remember when I started my business, it was a very different time. And it was not that long ago. The fundraising landscape has changed and become extremely gradient. I mean, at that time, you raise angel round, seed round, and you jump into Series A. Right now, there are tons of seed rounds. There's mango seed, pre-seed, post-seed. God knows how many seed rounds people are raising. And then when you jump into Series A, you're much more matured company. You understand that you have already got a product market fit. You are already building your ARR. So there's a lot of nuances that has played before as an uncertainty, inflection points, but now has pushed you and helped you to cross the chasm. So I feel like the fundraising landscape is going to change further post COVID-19. I mean, people are doing Zoom commitments. Think about that, how amazing it is. I mean, we have never thought any VCs, any investors will do a Zoom commitment, but that is happening. And I think, adaptability is a huge factor as a human and as a startup. So one has to understand how they can evolve better. And also they need to understand how they can attract investors where they can come as someone, not just with a check, but also mission aligned and roll up their sleeves and help those startups to, go to their next level of raise.
Great. And so what do you think is the biggest change we'll see over the next 5 years?
Oh, wow. I have no idea about that. I think as an investor, as somebody who studied economics and finance at a graduate school, I will always say, if I knew what's going to happen in the future, then here I am. I mean, I would not have been an investor. But I personally think that as a trend in the technology world, we will definitely see a lot of digital transformation coming, as I said, in the verticals, which has been much more legacy, but also a future of tech, future of work. We will see healthcare. Health tech is going to evolve. I think health tech has still lot to do, especially not just with telemedicine, but other opportunities. Healthcare had been a huge issue. I'm not an investor in healthcare vertical, but I strongly feel it has to evolve and bring much more mass level acceptance in the way healthcare strategies are there in the country. But I also think sports and TMT is one of the area. I think people would love to, have build a community around live events, and live events has always been, hey, let's go to that live events ground and be together. This is going to change. This is going to change big time. So I think TMT is another area we'll see a huge change. Sports is a part of that. I said future of work, and obviously we will see a lot of picks and shovels companies coming around sports tech. Obviously fintech and crypto, we are seeing a lot of changes coming, and I really hope a lot of great engineers get into solving crypto problems so that it's no longer a tech issue, no longer a physics issue. Also, have been great believer of quantum computing, but I think the physics has to evolve. I'm a big believer that a lot of great scientists who are working in the quantum computing area, we will see a lot of great startups also coming in. But I think it will take time. It will take time. Have some great, amazing, intelligent. By intelligent, I mean really intelligent folks to come into this and solve those problems.
Great. Let's talk about your investment thesis. What exactly is your thesis? And in particular, what's your criteria for looking at startups?
Yeah, so we are much more focused on the growth side of the venture capital tech area, and we are at the phase of understanding how diversity, equity, inclusion, and broader environmental, social governance mandates can bring in effect in the performance matrix of the Series A, Series B companies. So that's our biggest investment thesis. We want to open opportunities to all the tech companies that wants to disrupt the market, but at the same time, how can we bring much more better operational values as investors? Because I think the growth stage, most of the investors does not care about various equity, diversity, or environmental social governance mandates, because it's like you do whatever you feel like and just be the next deck of corn. But for us as an investor, we want to be a guide where the startups don't have to leave money on the table and doesn't have to bring further risk to their valuations, because the world is changing. And I think the startups are also understanding in a growth stage. It's a very different world right now. And as more companies are staying private, growth equity is becoming a new asset class.
Well, great. Can you talk about one or two startups that fit your thesis?
Oh, wow. I will not pick up one or two startups as such, but I definitely think there are amazing startups that are out there that we would love to invest, whether it's, Automation Anywhere or Ball Thread. I think I love those startups. They're no longer startups. They have become big. And there are some amazing startups in the early stage that have raised Series B round. I'll give an example of Overtime. I think they're doing amazing in the TMT space. They're transforming it. And there are a lot of great startups that are out there that are doing also a lot of picks and shovels of the space tech. When people are all ready to go to Mars and moons, these are startups which are helping you to enable that opportunity.
Great. Well, you see a lot of startups and investors out there. What is the challenge you see most startups face today when they launch their business?
Yeah, I think as we have seen the statistics, most of the startups, they don't even make it to seed round, or at least 1% make it to Series A. So things are becoming obviously more and more difficult. But I think when I started my first company versus where we see right now, there are a lot of open source information. VCs are laying out their investment theses, their blogs, and how to become a better technology entrepreneur founder. So there's tons of opportunities that are out there. I will strongly suggest startups that in order to not just to solve a problem, you need to understand at the end of the day, you not only are solving a huge issue, you also need to find out what is the best way to make money, when you're trying to solve the problem, and bring that as a part of your product architecture. I always say that. And understanding not just your market, your product market fit, but also building a community is so important. You need to have your loyal fan base. You need to have a community around you who loves you, who supports you, and who can vouch for you. I think as a startup, there's nothing more sexy, there's nothing more intelligent than building a community around you. I will strongly suggest every startup that are going out there, build a community around your product, people who can vouch for it, and always don't spend time on I always find is a huge issue, and it has always been an issue with me also, trying to perfect your product. This is the huge problem with every startup. They want to perfect their product. You don't have to do a perfect product. You just have to go out there in the market, have one or two features, fix that, and make it scalable, repeatable process. The scalability and repeatability is such an important criteria. And I think most of the time, startups don't fail to realize. I think the moment you build a sticky product feature, you find your customers being attracted to it, then build on top of it. And what happens is that if your features are not that great, come back to the drawing room and redo a better thing or a different feature. I think these are the things that startups highly ignore, and they want to do, I want to bring at least 10 features and then go to the market. No, I think bring anybody as your client, as your customer. Having someone who's going to pay even $1 for what you're doing is a big proof of concept and an opportunity that you are showing it to your investors that there are people who are backing you.
Great. And so on the other side, what's the challenge you see most investors face today?
I think the challenge investors face today which is a good challenge, is having amazing startups and getting which one to back, So especially with democratization of open source information technology, we are seeing tons of startups are starting their businesses because, the cost of starting a business is almost zero. And not just with startups, it's with funds also. So there are a lot of new investors are also in the market compared to when I was starting my business, 10 years ago. So it's a very different world that we are living in. But again, quality startups are always rare to find. But at the same time, there are a lot of startups which has proved that even maybe at the beginning they lack quality, they have learned and improved and embraced that. And I think as investors, especially in early stage, we are not looking to invest in the best product. We're just looking to invest in the best founder. So the bet is on the founder. The founders need to understand how they can click with their investors. And we are looking for a long-term marriage and hoping that marriage will continue with a better performance-driven return.
Great. Well, you see a lot of sectors and applications out there. If you had to pick one or two that are good opportunities for investors to pursue today, what would you put at the top of the list?
Oh, interesting question. I personally, part of this growth equity, because I feel like there are tons of women who are starting their businesses. They're getting dollars from amazing early stage female VCs, but there are not many VCs that are out there at the growth stage, where women are decision makers. And that's where the down pool seeding capital lacks, and most of the female founders has to do an IPO after Series B, Series C, while we see male entrepreneurs are still raising beyond Series G and H. So I feel we need more investors at the growth side, especially female investors and diverse investors. Hopefully we'll get there, but at the same time, I think we'll see a lot of newer investors coming and investing in the TMT space. That's going to be a very hot space soon.
Well, great. In the last minutes that we have here, what else should we cover that we haven't?
Oh, wow. You asked such amazing, great questions. I don't know what else can we cover, but I can say one thing that when it comes to sustainability, environmental, social, and governance, we always think that this is an extension of philanthropy. And I always tell that to investors and founders, no, doing good, bringing much more diverse team, diverse board, and creating a product that is good for the environment can also be performance driven and investment return driven. So doing good and making money are not mutually exclusive. And that is what we are preaching to all entrepreneurs, investors, because before we go to Moon and Mars, this is the Earth we need to live in, and we need to take care of it.
Well, great. Well, how best for listeners to get back in touch with you?
Yeah, sure. People can always get in touch with me through my Twitter account. It's GS_VC activist. And I'm always sharing tips about entrepreneurship, startups, emerging fund managers. So happy to connect. And my DM is always happy to DM me.
Well, great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, absolutely. Thanks a lot, Hall, for spending this time and energy with me. I really enjoyed it, and I love your pillow at the back.
Great, thanks. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.